Good afternoon, traders. In this video, I'm going to show you how to use and where to download my day trade tracking spreadsheet. You'll also see why it's so important to track your trades, not just your P&L. This spreadsheet will tell you if what you're doing is really profitable long-term, not just whether you're red or green right now. It's available at patreon.com/tradingarmor at the fully armored trader level. This includes access to both this day trade tracking spreadsheet as well as my swing trade tracking spreadsheet and all of the trading calculators that you see me use in my trading videos. This spreadsheet is designed to track up to 10 trades a day, which is too many, by the way, for an entire quarter or about 3 months worth of trades. Why? Because I want to encourage you to focus on the long term. If you're trading your plan the exact same way every day, you may have a red week once in a while, and that doesn't mean that you're necessarily doing something wrong or that your plan doesn't work. It could be the natural ebb and flow of the markets reacting to your plan, or just a statistical anomaly, much like a coin flip has a 50% probability of giving heads or tails, but you know you can get a string of all heads or all tails from time to time. So what I recommend is that you trade in 100 trade blocks and then decide if what you're doing is working or not. If you have a good plan, there should be no problem making it to 100 trades without losing much money. And you definitely shouldn't be able to blow up your account. If you can't make it to 100 trades without blowing up or taking a large loss, then you're risking way too much. Okay, let's say you download this today, which is August 17th. The first thing you need to do is change the date, which is very easy to do. Click up in this cell and we'll type in August 16th, 2021. That's yesterday's date. We're doing that for a reason. Once we hover over this cell, you can see this kind of large white cross. We want to get to the corner where we see this little black cross. Click on it, left click on it with a mouse, and then drag it all the way down to the end of the spreadsheet. And now all the dates should make sense, and they do. And then the buying power column is where you're going to enter and keep track of your day trading portion of your account. So for example, you could have, say, a $2,000 account, and maybe you want to split it up 50-50 into day trades and swing trades. So in this example, you would enter in $1,000, hit enter. Let's say today that you won 2 trades. So the win percentage is a manual calculation. Today's the 17th, so we're going to do that over here in this column. And this is a very easy calculation to do. If you won 2 trades, if you took 2 trades and you won one of them, you would just type in equals 1 divided by 2, hit enter, and it gives you the win rate of 50%. So now let's enter the trade data. So let's say we traded AMC and the session was intraday. So you can see it automatically finishes for me. You can put in pre-market or aftermarket or whatever session that you like to trade. I only take the ABCD setup. You might take maybe like the 3-bar play. You would type that in there. But for me, I only trade the ABCD setup, so I'm going to type that in. And then the entry, let's say we entered at $35.29. That's the price that we entered the trade at, obviously. The ideal entry, maybe we got some slippage on the way in, so the ideal entry was $35.24. And this is really important to keep track of, the actual entry versus the ideal entry, because maybe the trade would have hit your profit target if you would have gotten your ideal entry, but because you've got some slippage on the way in, you did not win the trade. And that could tell you, okay, your plan is working, but your executions are poor or something like that. And so it's good to know about that stuff. So now we're going to put in the stop price. So let's say our stop was at $34.72. And let's enter the exit price. Let's say we got 1 cent slippage on the way out. So we'll enter $34.71. And we're going to skip over this for now and go into the number of shares. We'll just say that we traded 5 shares. Now the P&L, the actual P&L, the reason why I wrote actual is because I don't know what broker, the reason why it says actual is because I want you to include your commissions or fees that are in the trade, not just calculating your profit based on your entry price, your exit price, and number of shares. You should also include any fees or any commissions that are included. Now, this is a manual calculation because obviously I could have easily put in a formula to calculate this automatically, but I don't know what broker you're trading with. I don't know what the commissions are with that broker. I don't know if there's any special fees that you have to pay. So for example, for me, I trade with Webull and they charge, well, it's not Webull, it's the government, FINRA, charges a 2-cent fee every single time that I sell shares. Whether it's 1 share or 1,000 shares, doesn't matter. I have to pay 2 cents. So in this case, if I did my math right, we would be at 287 instead of 289 without the fees. So that's our actual P&L. Now let's say, the last thing we need to enter is whether or not the stock went to 2R, which means 2 times our risk. And I always put my stop loss at -1 times my risk, and we got stopped out of this trade, so we'll put in a -1 there. If you trade some other risk management, you can put whatever you want here and it'll still work. It'll calculate it perfectly for you. Maybe you trade 1.5 to 1 or 1 to 1, you would just type in a 1.5 or a 1, or even if you trade something weird like 0.9, you can type that in and it'll still work. And this is important to keep track of as well, because if you're trading for a higher reward than what you risk, you could have a lower than 50% win rate and still be profitable. So that will let you know that that's the case or not. Now, let's say we took another trade that day on AMC. So again, it was an intraday trade, and I only trade the ABCD pattern. So this entry, let's say we got in at 35.10. And our ideal was 35.08, and our stop is 34.50, and our exit was 36.30. So again, assuming that we traded 5 shares, our P&L would be $6, but wait, we have to remember I have to pay 2 cents every time I sell any share, so my actual P&L will be $5.98. And then did the trade go to 2R? Yes, it did, so I'll hit a 2 and then enter. And you can see this calculates your hypothetical 2R profit target without any fees or commission. And then you also get a risk percentage, which this is not the risk that you're risking versus your account size. This is based on the price of your entry versus the price of the stop loss. And this is really important to track, because if your risk percentage is not close to the same on every trade, then the 2R all or nothing trading isn't going to always work. As long as most of the time the risk is about the same on every trade, then over time your risk management should be very effective. But if you're noticing that, hey, sometimes you have a 1% risk and then on other trades you have a 10% risk, then obviously that's not going to work out. So that's why that's really important. Your ideal risk and your actual risk, that's based on your entry, your actual entry and your ideal entry. And then ROI is just your return on investment. So how much did you make based off of what you spent on that trade? This we made 3.4% on. And the other one we lost 1.63%. And it looks like I forgot to put in a minus here because that should be a negative. So we'll fix that right now. Our actual P&L is minus. Now we see the minus 1.63%. And then if we go over to the left, everything else should be here. So our daily P&L is $3.11. This still says minus 100%, which is to be expected because, again, I am going to leave this as a manual calculation. If you want it to calculate automatically, you can. It's pretty easy. Let me show you right now. You can do this, and I'll tell you why you may not want to. Equals sum, then open parentheses. And in this case, we're going to, well, this will be the same for you if you start it here. B5, comma, D6, and then it'll do it for all of the other cells. Once we drag it down, you can see now we know our new buying power based on our P&L. And if we want it to do that every single day, we can just drag it down. And as we get new P&Ls, this number will automatically update. But let's say that you change your account size, you want to do deposits or something like that, then you may not want to do that. You may just want to do it manually. In that case, you would just add the daily P&L, 311, plus the previous buying power. You would get the same thing. So that's that. Now, let's say we take a trade on the next day with AMC again, and intraday. We're just going to enter in the same numbers as before. So what was it, 35? I know this is never going to happen. You're never going to have 2 identical trades, but just for the sake of speeding up this video, we'll put in all the same data. And I just want to show you how this spreadsheet will track everything over time and all the different data that it includes, because there's more than what you're seeing right here. So again, we took 5 shares. It did go to 2R. So that's that. And then again, we have to put in this manually, the win rate. So this day we only took 1 trade in this example. So it's put equals 1 out of 1. And you can see it already updated our buying power with added in the P&L from that day. Now let's scroll down and we'll see what other kind of data that you can track here. So if you only trade intraday, you could just type in, oops, I'm sorry, I scrolled way too far down there. So if we go over here to the intraday cell, and let's just assume that we only trade intraday. Otherwise, you would have to calculate this manually, which isn't that big of a deal. But if you only trade intraday or you only trade pre-market, you can just enter in this formula, equals sum D6 colon D102. And then in that case, it'll automatically calculate your P&L. And if we do in the number of trades, that is something that you have to enter in manually. So we've taken 3 trades so far. And then our win percentage, again, manually enter the win percentage. We've won 2 out of 3 trades that we've taken. And that gives us our win rate of 67%. If you're trading all or nothing 2R, that would be a fantastic win rate because break even is 33%. And that's another important point. You should know whatever risk management that you're trading, you should know what your break even win rate is. That way over time, you can see, okay, is this thing going to be profitable in the long run? You'd be surprised with a 2R all or nothing win rate, which has a break even of 33%. If you only had a win rate of 40%, after 10 trades, you would be up 2R, but after 100 trades, you would be up 20R, 20 times your risk, and after 1,000 trades, you would be up 1,000 times your risk. So that kind of shows you the value of understanding risk management, knowing what your break-even win rate is, and the value of tracking a whole bunch of trades, not just 1 week's worth or 10 trades, and then trying to decide, you know what, it's too close to break even. If it's close to break even after a few trades, you could be in for a very profitable trading system if you take a lot of trades with it. So now we can also see our, well, let's do the win percentage without errors. So let's just pretend that one of those trades was taken in error. We'll say one of our profitable ones was taken in error. So then that means we only won 1 out of 2 trades without error. And this will tell you, okay, if I traded my plan exactly, this is what my win rate would be. And then the average of those 2 is automatically calculated. And that's an important value to know because that tells you that over time, after you get better at trading this plan, that may be what your actual win rate will be. So that's that. And then the R value is automatically calculated, so you can't click in that column either. That, yeah, I was thinking maybe Excel froze for a second, but yes, the R value is automatically calculated. So it's telling us that after these 3 trades, we're up 3R, and that makes sense because we had 2 winners, so that is a win of 4R, and we had 1 loser, that's minus 1R, so 4 minus 1 is 3, so that makes sense. And then if we scroll to the right, we can also see that our R value, sorry, our R value for our first trade is 1. I scroll up here to show you that, but this is all automatically calculated. And then our R value for trade number 2 is 2 because we've only taken 1 trade and it worked out. So that's done automatically. And I just noticed that the average risk and average ROI is not being calculated. So I'll fix that before I upload this to Patreon. That'll just take me a few seconds. And then I'll upload this, and then you'll know what your average risk is on every single trade. As I said before, that's pretty important to know because if your trades are not close to your average risk, then your risk management is not going to be effective. So I'll fix that, and then we'll upload this to Patreon in just a moment. And let me just make sure that I covered everything else. I guess I just want to leave you with, if you're just tracking your P&L, there's no way you'll ever know if what you're doing is working. If you don't have a written plan that you're trading, then that means you're taking random trades and you can only expect random results. So hopefully you see the value of a trade tracking spreadsheet, whether or not you decide to use this one. And I can tell you that tracking my own trades was one of the best things I've ever done as a trader, because once I saw the data showed that there was some promise of my trading plan being profitable, it was much easier for me to believe in the plan and just follow it no matter what happened. So I hope this video was helpful. Please let me know if there's any questions regarding the spreadsheet, my trading plan, or anything else, and I'll be happy to respond to you in the comment section. As always, if you take a trade, have a plan going into that trade and stick to it no matter what. Always take your stop losses, honor your profit targets, and in the long run, you should be green. Take care.